You open your platform and there they are. 28 pairs, maybe more, all blinking at you. Some are green, some are red, and every single one of them looks like it might be doing something. So which one do you actually look at? Most people answer that the same way every single morning. They open the pair they always open because it's the one they know. And that's not a decision. That's a habit wearing the costume of a decision. So today we fix that, and we open chapter 6 while we're at it. By the end of this video, you'll know how professionals cut a full screen of charts down to one obvious candidate. Why the real question is never which chart looks good, but which currency is strongest and which is weakest. And why a pair can sit completely flat all day, even when both of its currencies are having the busiest session of the week. That last one catches almost everybody. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. Let's go back to something we established in the second video, because everything today is built on top of it. You never buy a currency on its own. You buy one currency by selling another. Every chart on your screen is a comparison, not a thing. And once that clicks, a slightly strange conclusion follows. The pair isn't really the unit you should be thinking in. The currency is. Here's why that matters. When you look at Euro USD, that chart is not telling you how the euro is doing. It's telling you how the euro is doing compared to the dollar. Those are two different statements. The euro could be having a bad day, and Euro USD could still be climbing, as long as the dollar is having a worse one. So beginners scroll through 28 charts, hunting for the pretty one, which mostly means the one that already moved. Professionals do something almost embarrassingly simple instead. They ignore the pairs completely for a minute and ask a single question. Out of the 8 currencies I trade, which one is the strongest right now? And which one is the weakest? Because once you have those two names, the pair chooses itself. Strongest against weakest is, by definition, the widest gap on your screen. It's the one chart where one side is being bought hardest and the other side is being sold hardest at the same moment. Two forces pushing the same chart in the same direction. And there's nothing mystical about where that strength comes from. It's all things we've already covered. Interest rate expectations, which we met with the yen and the franc, commodity prices and risk appetite, which drive the Aussie, the Kiwi, and the Loonie, and the economic calendar, which can rewrite the entire ranking in 9 seconds. Strength is just the market's current opinion about a currency, updated live. So here's what that looks like in practice. Say the Australian dollar is the strongest currency on the board this session, because risk appetite is good and commodities are firm. And say the yen is the weakest, because rate expectations have turned against it. You don't need to scan anything else. AUD/JPY is your chart. Not because it looks nice, not because somebody posted it, but because it's the exact point where those two extremes meet. Every other chart on your screen is a watered-down version of that same move. Now, how do you see this without any special tool at all? You already did it once, last video, with the dollar. Same trick, different currency. Take one currency, look at it across several charts at the same time, and the pattern jumps straight out at you. You're not analyzing anything yet, you're just counting which way it's leaning. USD/JPY is up, Euro/JPY is up, GBP/JPY is up, and AUD/JPY is up, all on the same morning. 4 charts, 4 different partners, all pointing the same way. That is not 4 separate stories. That's one story. The yen is weak. The yen is the common ingredient, and the yen is the currency doing all the work. So the rule is simple. When one currency shows up on the same side of several charts at once, That currency is the story, and the others are just whatever it happened to be measured against. Once you start seeing your screen that way, you stop reading 28 charts and start reading 8 currencies. That's the whole lens. That's relative currency strength. And you can do a rough version of this in 2 minutes with no software at all. Pull up the 7 majors we spent Chapter 2 on, and for each one, ask a yes or no question. Is this currency gaining or losing against the dollar right now? Line up the answers, and you've got a crude ranking, with the dollar in the middle, the strong ones at one end, and the weak ones at the other. Notice how neatly that picks up where last video left off. The dollar index gave you one currency's story in one line in 15 seconds. Brilliant filter, but it only speaks about the dollar. Relative strength is that same idea widened out to all 8, which is exactly why it's the lens professionals reach for first. Right. Now, the second half of this video, and honestly, it's the part that saves people the most frustration. Because there's a situation that comes up constantly, and it makes beginners think their platform is broken, their broker is cheating them, or that they've somehow picked the one pair in the world that refuses to move. None of those things are happening. Picture a morning where the euro is genuinely strong. Good European data, buyers everywhere. And on that same morning, the pound is also genuinely strong, because the UK printed a good number too. Both currencies are having a huge day. So you open Euro GBP expecting fireworks, and it's flat. A thin, sideways, nothing happening chart. Nothing is broken. Euro GBP doesn't show you how busy the euro is, and it doesn't show you how busy the pound is. It shows you the difference between them. And when two currencies are strong by roughly the same amount, the difference is 0. Two people running side by side at the same speed look motionless to each other. It works exactly the same in reverse. If the euro is being sold hard and the pound is being sold just as hard, Euro GBP still goes nowhere. Two currencies collapsing together produce a flat chart, just like two currencies flying together do. It was never about how much is happening, it's about the gap. So here's the sentence to keep from this video. A pair only trends when one of its currencies clearly outperforms the other. Movement on your chart is divergence, not activity. Read that twice, because it's the difference between blaming the market and understanding it. That one idea explains more dead charts than any indicator ever will. Which means, when you catch yourself saying, Euro GBP is boring, or this pair is dead, flip it around. The pair isn't broken and it isn't lazy. It's being honest. It's reporting that right now, there's no meaningful gap between those two currencies, and that's information, not a fault. And the mirror image of that is where the good days live. Strongest against weakest is the maximum gap available to you at that moment. It's why AUD JPY on a strong risk-on day can run for hours, while EUR GBP shuffles sideways 20 pips. Same market, same hours, same session, same trader sitting in the same chair. The only difference is the size of the gap you chose to stand in front of. This also explains something that confuses a lot of people about news. One headline can send one pair flying and leave another one asleep. If the news lifts both currencies in a pair, that pair barely reacts. If it lifts one and sinks the other, that pair takes off. Same news, two very different charts, and the gap is the entire reason. Now the honest limits, because this lens has 3 of them, and you need all 3. First, strength is always measured over a window. Strongest today and strongest this week are different questions, and they will disagree with each other regularly. Pick the window that matches how long you actually intend to hold, and if you're not sure what that is yet, that's what the trading style course is for. Second, this tells you which pair, never when or where. Strength hands you the best chart in the building. It does not hand you an entry, a stop, or a target. That's structure, and that belongs to the technical analysis course. Pick the pair with this lens, enter it with that one. And third, remember what we learned about correlation 2 videos ago. If the yen is the weakest currency on the board, then every single yen pair looks attractive at the same time. And taking 3 of them isn't 3 trades, it's 1 trade in 3 costumes. This lens can hand you a very well-reasoned way to triple the same risk. Choose the cleanest single expression, and leave the rest alone. 2 quick practical notes before we wrap up. 1. By the time a gap is glaringly obvious to everybody, part of that move has already been paid out, so treat a huge spread in the ranking as context, not as a starting gun. 2. The strongest versus weakest pair is often a cross rather than a dollar pair, and crosses carry wider spreads, as we saw back in the 4th video. A cleaner move with a pricier entry is usually still worth it, but check the cost instead of assuming. So stack all of this into the routine you've been building. Session first, so you know the market is awake. Dollar bias second, from the index. Strength ranking third, to find your 2 extremes. Pair fourth. And then you hand it over to your entry rules. 4 steps, about 3 minutes, and you walk into your session with 1 chart instead of 28. So how do you decide which pair to even look at? You stop looking at pairs. You rank the currencies, you take the strongest and the weakest, and you let that combination name the chart for you. Because a pair only moves when one side clearly beats the other, and the widest gap is always the cleanest ride. Of course, I've just spent 10 minutes telling you to rank 8 currencies, without telling you how to actually see that ranking at a glance. Doing it by hand across 7 charts works, but nobody wants to do arithmetic at 7 in the morning. So the next question is the obvious one. Is there a tool that simply shows you the strongest currency? There is. It's called a currency strength meter. Next video, we'll look at what it's really measuring, how to read it without fooling yourself, and how to use it to pick the easiest pair of your session. I'll see you there, trader.
So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the Lucro Trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the Lucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts. It's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.